Plus, this breakout means that gold is going up. The price of gold went to $10,000 tomorrow. Gold has been underpriced and underowned.
Gold and silver just sent another clear signal, and Peter Schiff is breaking it down. New data is in, and the mainstream still isn't paying attention. In this video, he exposes why gold is still drastically underpriced and why central banks, despite buying like never before, still barely own any. Why precious metals might be your only real protection. Stick around. This might be the most important update you hear all year.
Gold was down 3%. The gold stocks, the GDX, was down 6.5% on the week, and the GDXJ was down 7%. Why? Right? It makes no sense. Yes, I know gold went down, but so what? It went down to 3,300. That is a very high price for gold relative to all of the earnings expectations for these gold stocks. Nobody that covers gold last year expected gold to be at 3,300. In fact, when gold got to 2,000 a little over a year ago, nobody thought it can go any higher. They all thought that was the top. And here we are more than 50% higher. And stocks like Newmont and Barrick are lower than they were back then when gold was at 2,000. Now, there are some stocks that are higher, but the two biggest stocks are actually lower. So why should they even go down at all? They should just be going up every day, regardless of where gold is. Who cares? I mean, if gold's, bopping around above 3,000, that is a phenomenal price. In fact, we got the Newmont earnings. They were the first major gold company to come out with earnings. We got those earnings after the market closed on Thursday, I believe. And so Newmont beat its earnings estimate by 42%. 42% above what analysts thought they were going to earn. That is a massive beat. Their year-over-year revenue in the quarter was higher than the prior year's revenue by 25%. That is a huge increase in revenue in a year. But their profits, quarter over quarter, were up 127%. I mean, how many companies in the S&P 500, Newmont's the only gold company there, are going to report year-over-year profits up 127%? A crazy amount. You would think, oh, this stock's going to be way up because, gold was up like $50 that day too. It was a day that gold happened to be up. So gold's up $50. The earnings come out and the stock's up like 2% that after hours. If the price of gold went to 10,000 tomorrow, right? And then it went down to 9,000, right? Would these stocks really have to get killed? Especially if they barely moved up on the move to 10,000, right? I mean, once you have this kind of breakout, which is what we've had in gold. See, what people don't really get is that for years and years and years, gold has been underpriced and underowned, right? Investors don't own it. Central banks have a very small amount. If you look historically, even though they've been buying a lot of gold, if you look at the gold that central banks own as a percentage of their total reserves, it's still historically low. It's not as low as it was, but it's still below historical averages. That's because the currency reserves, mainly US dollars, have exploded. And so central banks have underowned gold. Retail investors have completely underowned it, and institutional investors. So the private sector has underinvested in gold, and so has central banks. And so gold prices have been too low. Meanwhile, the cost of mining gold keeps going up because of inflation. Now, if gold was purchased the way it should have been by investors and central banks, given how much inflation was being created and all the dollars and our trade deficits, the price of gold should have been a lot higher. But it wasn't. And the biggest victims of that were the gold mining stocks because they had to deal with the inflationary impact on costs without getting the full impact on the price of gold. Well, that's now changed. Ever since, I think, early 2024, gold prices are now far outstripping the cost of mining. But Wall Street hasn't figured that out yet. They haven't re-rated these stocks. So at some point, they need to be massively re-rated at much, much higher prices, even if gold goes down hundreds of dollars, because it's already moved up so much beyond the cost of mining it. Plus, this breakout means that gold is going up. 34.90 that we got on Monday, that is not the record high for gold for all of eternity, not even probably for the rest of the month. Gold prices are going above 3,500. They're going to go above 4,000. They're going to go above 5,000. So what should these gold stocks be worth? Because the cost of mining is not going to go up anywhere near the same percentage. It will go up. Inflation is going to drive the cost of everything up. But as investors realize how bad inflation is going to be and how long it's going to be here, they're going to keep bidding up the price of gold. I think what happened, especially looking at what was happening on Monday night, because all of those trends continued on Monday night. In fact, gold hit a new all-time record high. It was within $10 of 3,500. That's how much gold had gone up. It was above 3,490. Now, you may expect some profit taking at a round number like that. We were almost halfway between 3,000 and 4,000. And we had only just breached 3,000 like weeks ago. And now we're almost halfway to 4,000. But the dollar was getting killed. The euro was above 115. There was a 97 handle on the dollar index. Stock futures were selling off. Bonds were under pressure. They didn't make new lows, but they were on their way. And so I think looking at what was happening in the markets, the advisors to Donald Trump got to him and said, we need to do some damage control. You need to walk back that Truth Social post. And so on Tuesday morning, early in the morning, Donald Trump said, hey, of course I'm not going to fire Trump, Powell. He's going to be there until the end of his term, or I'm not going to do anything with Powell. And the market had a huge rally on that. And, it's hard for me to believe with all of the market savvy people that are in the Trump administration. A lot of people have come, from Wall Street, right, that are there. And they know that the markets are going to move big on comments that come out of the White House, even though nothing actually happens, right? Just somebody saying something, not actually doing anything, but just a post on Truth Social can cause massive swings in the stock markets, in the currency markets, in the crypto market. I'm sure there are people in the Trump administration that are trading off of this. How could they not be, given the size of the moves and the fact that, there's no actual news. I don't even know if it's insider trading because there's nothing actually happening. These are just comments that really don't mean anything. And in fact, I think the comments are specifically designed to impact the market. I think the Donald Trump's comment about Powell was, oh my God, the market's getting killed. I need to turn it around. So let me reassure the markets that, there's still Fed independence, because that was what people were worried about, that, this means that we're not going to have an independent Fed. We're going to have a Fed controlled by the White House, and that's going to be bad, as if, it hasn't been bad all along. But I agree that the more you politicize the central bank, the worse it is, because all the political pressure is for easy money. That's why it's ridiculous for Donald Trump to be accusing Powell of being political, in that Powell is not cutting rates, because that's political. So the fact that he's holding tight is more of an independent move, because the political pressure is to cut. Now, he should actually be raising rates. And I think the fact that he's not raising rates is because of political pressure.
The signs are flashing. The reports are clear. Gold and silver aren't just assets. They're warnings. Peter Schiff has laid it out. Now it's up to you to decide. Stay in paper or pivot to real money. If you found this eye-opening, make sure to like, share, and subscribe, because the storm is coming and this channel will keep you ahead of it.